Welcome back to the Deep Dive. You know we're here every single day with your essential Bitcoin intelligence briefing. And, well, what a 24 hours it's been.
It really has. Quite the shift.
Yeah, this isn't just another market update, is it? This feels, I don't know, genuinely pivotal, a real game changer happening. Bitcoin is absolutely broken out, and it seems fueled by this, like, powerful alignment of positive catalysts.
Yeah.
You've got the macro landscape, institutional moves, and even, maybe most importantly, a big shift in the regulatory vibe.
That's a great way to put it. A confluence of factors.
So let's unpack this for you. Where do we even start?
Well, the price action itself tells a story. We've seen a really decisive move, surging past that key psychological level, $115,000, hitting a 3-week high.
Okay.
But what's truly significant here, I think, isn't just the number itself, but how it reflects these powerful underlying shifts that seem to have been building up.
Absolutely. I mean, for weeks, Bitcoin was kind of stuck in what we kept calling fragile consolidation, right? Just bouncing around in that tight range.
Yeah, trapped. Everyone was sort of holding their breath, waiting for a clear direction.
Exactly. Well, that waiting game is definitely over. Volatility is back, and it brought a serious surge with it.
It certainly has. Looking at the immediate market stuff, Bitcoin just decisively broke out. It briefly touched around $116,317.
Wow.
But maybe more important is just the overall strength of the move, you know? Pushing it up over, what, 1.1%, 1.2% in 24 hours?
And the conviction behind it?
Oh, yeah. The clearest sign has to be the U.S. spot Bitcoin ETFs. We saw nearly $1 billion in net inflows.
$1 billion. In how long?
Just the last 2 days. 928 million, to be precise.
Okay, that's serious capital noticing.
It is. And this momentum has pushed the total crypto market cap past $4 trillion. Bitcoin's still dominant, though, holding over 57% market share, even if it dipped slightly in the last day.
So Bitcoin surged, touched that $116,300 mark roughly, before kind of settling back into the $115,000, $152,000, $115,500 zone. But this wasn't a quiet little rally either, was it? The volume.
No, not at all. Daily trading volume exploded, over $52 billion.
$52 billion.
Yeah, that really underlines the strength, the conviction behind this move.
Okay, but did it hold above 116K? You mentioned a brief touch.
Good point. We did see a slight rejection just above $116,000. That's pretty normal, technically speaking. It establishes that 116,300 and 116,344 area as, you know, a primary resistance level. Profit taking happens there.
Right. Sell the news or sell the level.
Exactly. But the good news, the really good news, is that this rally seems to have established a new higher support base for Bitcoin. It looks pretty firm now between, say, $113,700 and $115,000.
So a new floor.
Seems like it. And if we can break decisively above that $116,300 resistance zone, while the next major target on the bullish path looks like $118,000, maybe even up to $120,000.
Okay, now here's where I think it gets really interesting, the stuff happening under the surface. The market mechanics that actually fueled this. You mentioned a short squeeze.
Yes, classic setup.
Can you walk us through that? How big a deal was it?
Sure. So a short squeeze basically means traders who are betting on Bitcoin's price falling got caught offside.
They bet wrong.
Right. And as the price rose rapidly, they were forced to buy Bitcoin back to close their positions and limit their losses. This forced buying just accelerates the rally even further. It's like pouring gasoline on a fire.
Okay, and we saw that happen here.
Oh, definitely. We saw over $104 million in liquidations in total. And get this, a massive $101.67 million of that came from those short positions being liquidated.
Wow, so the bears got squeezed hard.
They really did.
Yeah.
Now, if we look at whale activity, the big holders, it paints kind of a nuanced picture, but ultimately, I think, a healthy one.
Okay, what are the whales doing?
Two things happening. First, long-term holders, the real HO dealers, they've been just relentlessly accumulating. Added over 218,000 BTC since March.
Wow.
And this metric, the mean coin dollar age, which basically shows how long coins have been sitting still, it's rising. That tells us older money isn't moving, signaling really strong underlying demand, diamond hands, you know.
Got it. Strong conviction from the long-term crowd. But what's the nuance?
The nuance is that some newer whales, let's say those holding between 100 and 10,000 BTC, they have been taking some profits, about $3.2 billion worth since April.
Ah, okay, so some selling from bigger players too. Is that bearish?
Not necessarily. I'd argue it's actually characteristic of a maturing market. You have participants intelligently taking profits at key resistance levels like that 116K area we just hit.
Right. It lets the market kind of breathe and absorb that supply before maybe making the next move up.
Exactly. It's healthy profit taking, not panic selling.
Okay, so with Bitcoin catching fire like this, how's this energy spilling over into the rest of the digital asset world? People are talking about the great rotation of capital. What does that actually look like?
Yeah, that's the theory, and it seems to be playing out. The institutional preference for Bitcoin is clear that reinforces its dominance. But the capital cascade theory suggests a pattern. Think of it like this. Phase one, the big institutional money flows into Bitcoin first. It's seen as their flight to quality within crypto.
Building the foundation.
Precisely. Once that foundation feels solid and confidence builds, phase two sees capital start to trickle down or rotate into the large cap altcoins, things like Ethereum, Solana.
And are we seeing signs of that?
We are. A pretty clear signal, actually. The spot Ethereum ETFs, which had been seeing outflows, just broke that streak. They pulled in over $113 million recently.
Interesting. Okay, so money's starting to move into the next tier.
Seems like it. And if this rally holds and Bitcoin consolidates higher, theory suggests phase three pushes capital even further out on the risk curve into mid-cap and maybe even small-cap altcoins.
Is there any way to measure that sentiment?
Well, one indicator people watch is the altcoin season index. It recently climbed to 67, up from a low of just 29 not long ago. That suggests the market is starting to anticipate this next phase, getting more optimistic about alts.
Fascinating. But it wasn't just crypto stuff driving this whole move, right?
Yeah.
You mentioned the macro picture earlier. That felt like the real spark.
I think you're absolutely right. The market's decisive move wasn't really crypto native initially. It was fundamentally kicked off by a huge shift, or maybe clarification, in the macroeconomic landscape.
The inflation data, the CPI report from the U.S.
Exactly. The U.S. Consumer Price Index, the CPI for August, it came in showing an annual inflation rate of 2.9%.
Which was good, bad.
It was perfectly in line with what economists expected, and in this environment, an as-expected reading is actually profoundly bullish.
Why is that? Seems anticlimactic.
Because it removes uncertainty.
Yeah.
If it had come in hotter, higher than expected, that would have really poured cold water on hopes for Fed rate cuts.
Well.
So meeting expectations was a big relief rally trigger.
Okay, that makes sense. Less fear.
Precisely. And that positive feeling was reinforced by softer than expected producer price index figures, the PPI, as well.
And we saw this almost immediately ripple into traditional markets too, right?
Right.
A broader risk-on move.
We did. U.S. equities rallied right alongside crypto. The S&P 500 was up, 0.8%? The Dow gained 1.4%. Clearly, both traditional finance and digital asset markets read those inflation tea leaves the same way. Good news for risk assets.
So, connecting the dots, good inflation data means the Fed is more likely to
cut interest rates. This benign inflation report, especially combined with some recent signs of weakness in the labor market.
Right, those job number revisions were pretty big.
Huge. Over 900,000 jobs revised down, and the unemployment rate ticked up to 4.3%. All of that together has basically solidified expectations for a Federal Reserve rate cut very soon.
And when you say solidified, how certain is the market?
Well, looking at the probabilities, the market is pricing in a near certainty of an interest rate cut at the next FOMC meeting, the Federal Open Market Committee meeting, on September 17th.
Near certainty, like what kind of odds?
We're seeing probabilities around 82% on platforms like Polymarket, and the CME FedWatch tool is actually showing 100% probability of a cut.
100%.
Okay.
So the market is absolutely convinced a cut is coming.
Yeah. What's fascinating here, and really bullish, is that the conversation has shifted. It's no longer if the Fed will cut rates, but rather how many cuts we might see going forward.
The start of an easing cycle.
Potentially. And this pivot, moving from a restrictive monetary policy stance towards a more accommodative one, is historically a very, very bullish backdrop for risk assets like Bitcoin.
And there's the dollar effect too, right?
Absolutely. A direct consequence of the shifting rate expectations is a softening U.S. dollar. And for Bitcoin being this global dollar-priced asset, a weaker dollar provides a direct tailwind. It makes Bitcoin inherently more attractive to global buyers.
Okay, so we've got the market breakout fueled by squeezes and whale action. We've got these powerful macro tailwinds from inflation and Fed expectations. What about the response from institutions specifically, and other key things happening inside the Bitcoin ecosystem itself?
Yeah, lots going on there too. We even saw some interesting historical activity pop up, a so-called Satoshi-era whale wallet.
Meaning really old.
Extremely old, dormant for 13 years. It suddenly moved 445 BTC.
Wow. How much is that worth now?
About $50 million today.
And back when it was last moved?
Get this, just over $5,000.
Unbelievable. 13 years. That's some serious long-term holding. What does that signal, if anything?
It's Hard to say definitively from one move, but it's rare. It subtly reinforces that long-term value narrative, maybe older capital repositioning or finally realizing those incredible gains. Just adds to the general market buzz.
Yeah, quite a story. Meanwhile, though, while these old coins are moving, there are new debates still raging within the Bitcoin community itself, aren't there? Like the whole ordinals and BRC20 token thing.
Oh, yeah, that continues to be a hot topic. Creates a real philosophical divide. You had Adam Back, the CEO of Blockstream, recently arguing pretty strongly against what he calls spam in the time chain, meaning he thinks these tokens and inscriptions just clog up the Bitcoin network, increase fees, and distract from Bitcoin's core purpose as, sound money.
Interesting debate. Does that push development in other areas?
It definitely seems to be accelerating the push for Layer 2 scaling solutions. These are technologies built on top of Bitcoin aimed at increasing transaction speed and throughput and enabling new kinds of functionalities without clogging the main chain.
Any examples gaining traction?
Well, one project called Bitcoin Hyper, which is a Layer 2, apparently just raised over $15 million in its presale. That shows pretty significant investor interest in finding ways to scale Bitcoin for broader uses.
Okay, so innovation happening on the scaling front. What about companies using Bitcoin itself? That corporate treasury thesis, is that still building?
It absolutely is, and it's a key trend. We're seeing more companies look at Bitcoin as a strategic reserve asset, not just speculation. Just in the last day, DDC Enterprise, they're listed on the New York Stock Exchange, ticker DDC, announced a partnership.
With who?
With Wintermute, a major crypto trading firm. The goal is specifically for Bitcoin accumulation and managing it as part of their corporate treasury.
So basically deciding to hold Bitcoin on their balance sheet instead of just cash.
Exactly. And this trend, every time a company does this, it helps validate that digital gold narrative. It treats Bitcoin as a serious store of value, a hedge. Plus, it creates this slow, steady, and importantly, pretty price-insensitive source of demand from long-term holders. It's a big vote of confidence.
It really feels like it. And it's not just about holding Bitcoin anymore, is it? The really big shift seems to be how the world's largest financial institutions are now actively looking to apply the underlying technology blockchain to traditional assets, revamping the financial rails.
That's a huge point, maybe even bigger than corporate treasuries in the long run. It's a potential game changer for all of finance. Look at BlackRock, the world's largest asset manager.
What are they doing?
They're actively exploring the tokenization of their own ETF products.
Tokenizing an ETF, what does that even mean?
It means representing shares of their existing traditional ETFs as digital tokens on a blockchain. The potential benefits are massive. Think 247 trading instead of market hours, instant settlement instead of days, and easier fractional ownership.
Wow. That would be a fundamental change.
Absolutely. And it's not just BlackRock dreaming. Nasdaq, the exchange operator, is actively building the market structure needed for these tokenized securities. They've even submitted proposed rule changes to the SEC.
The regulator.
Right. Proposing rules for how tokenized assets would be handled, cleared, and settled within the existing financial system. These are concrete steps. It means the tokenization of everything is moving from theory towards becoming a practical reality.
And that's bullish for
the entire digital asset ecosystem, really. It validates the technology and builds the infrastructure for much wider adoption across all asset classes.
Okay, this is huge. Market breakout, macro tailwinds, institutional adoption, tokenization. But maybe the most structurally significant development, as you hinted earlier, is this potential shift in the U.S. regulatory landscape. That feels like a really big piece of the puzzle finally falling into place.
I agree. Potentially the most impactful long-term catalyst we're seeing right now. There's been a really notable tonal shift coming from the SEC, the Securities and Exchange Commission.
How so?
Well, Chair Paul Atkins, speaking at an OECD event, actually signaled support for a more tailored and constructive approach to crypto regulation. He mentioned something called Project Crypto.
Okay.
And significantly, he even criticized the regulator's own history of aggressive enforcement actions against crypto firms. He actually floated the idea of maybe moving towards a unified licensing system.
Wow. That's a very different tune than we've heard for years. Why is that shift so important?
Because it signals a potential move away from what everyone called regulation by enforcement.
Hmm.
That approach, where rules are unclear until someone gets sued, creates massive uncertainty and genuinely stifles innovation, especially domestically.
Right. Companies don't know the rules of the game.
Exactly. This new talk promises, or at least hints at, more clarity and predictability. And that is precisely what large compliance-focused institutions need before they can confidently enter the market at scale.
And this builds on other recent moves too, right?
Yeah.
Like the Stablecoin Act.
Yeah, it fits with the groundwork laid by things like the Genius Act back in July 2025, which started setting up oversight for stablecoins. It feels like a broader trend towards building actual frameworks instead of just playing whack-a-mole.
So this raises the big question then. What's the potential impact if this regulatory thaw continues?
Well, the potential impact is enormous. It means seriously de-risking the U.S. digital asset market. It would likely encourage a lot more domestic investment and innovation. And crucially, it could finally pave the way for those really large conservative financial players, the ones who've been waiting on the sidelines for regulatory certainty to finally get involved in a meaningful way. It's a fundamental improvement to the whole operating environment.
Okay, so let's try and sum this whirlwind 24 hours up for everyone listening. What we've seen is this like rare and really powerful alignment of bullish catalysts all hitting at once.
That's it. You've got the favorable macroeconomic shift with inflation cooling and rate cuts expected.
Yeah.
You've got a clear surge of institutional capital flowing in, shown by those ETF numbers. And now, maybe most importantly, you have this landmark regulatory thaw seemingly beginning in the U.S.
Quite the combination.
It really is. And this potent mix seems to be what finally broke Bitcoin out of that multi-week consolidation pattern and has just reignited bullish sentiment across the entire crypto space.
So looking ahead now, what does this all mean going forward? What are, say, the two most critical things you think people should be watching very closely in the coming days?
Okay, two key things. First, obviously, is the official FOMC rate decision. And just as importantly, the accompanying statement and press conference next week, that's September 17th.
Right, even though the cut seems priced in.
Exactly. While a 25 basis point cut is largely expected now, the forward guidance from the Federal Reserve, what they signal about future policy, will be intensely scrutinized. That will set the tone.
Okay, Fed decision and guidance. What's number two?
Number two is Bitcoin's price action right at that key resistance zone we talked about, around $116,300. How it behaves there is critical.
Give a break level.
Pretty much, for the short term. A decisive breakout above that level would really confirm the bullish trend and open the door to those higher targets, $118,000, maybe $120,000.
And if it fails there?
A sustained failure, a strong rejection, could lead to a period of healthy consolidation, maybe pulling back to test that new support level between $113,700 and $115,000 before potentially making another attempt higher. Still bullish overall, but a pause.
Got it. Lots to monitor, but it really feels like the underlying structural dynamics for Bitcoin have improved pretty materially, laying a much more robust foundation for future growth, wouldn't you say?
I would definitely agree with that. The foundation looks stronger.
So, despite whatever short-term volatility we might see around these key levels or next week's Fed meeting, here's a final thought for you to ponder. With all these positive shifts, the macro, the institutional involvement, the regulatory progress, the tokenization infrastructure being built, what kind of new institutional integrations or broader real-world applications might we actually start to see emerge now? Now that the world's financial rails seem to be actively finally being laid for this asset class in such a significant way. Something to think about.
Definitely. The possibilities are starting to feel much more real. It's going to be fascinating to watch what unfolds next.